All right, folks. So this is the first part of this series. I want to focus on earnings per share. Now, you've probably heard about PE ratios, but maybe you don't fully understand what PE ratio is. So PE ratio is the price of the stock divided by the earnings per share. Now, the price of the stock is always going to change every single day. So PE ratio is not something that is always the same. It's always changing. It's always going to change. So you might say, oh, the PE ratio is 15. Well, tomorrow it might not be 15. Tomorrow it might be like 15.5. It might be like 14.2. But the way the market's been going, it might be like 12. So let me just talk about earnings per share a little bit here. So the way that I'm going to explain this to you is I'm just going to show you straight up from a actual statement on a company's quarterly earnings. So I'm looking at Etsy Investor Relations. I typed it in this search browser right here. Now I'm going to go click on this website. And from here, so I'm kind of showing you how to navigate through this. We're going to go on the financials and you can see quarterly results. So we're going to click on this. And then it shows 2022 results, Q1 earnings. This is the most recent. So we go and we click on Form 10Q. And then I already clicked on that and we go right here. So we're going to scroll down a little bit. And then they have this little note. It's called Note 4, Net Income Per Share. So now they show us how earnings per share is calculated. So there's two types of earnings per share. There is basic and there is diluted. So when it comes to earnings per share, the calculation is actually the net income divided by the shares outstanding. But this can change because if you ever worked in a big company, they have things called stock options and employee stock-based compensation. So employees will get paid in stock, and basically they'll get an option, and then they can exercise that option. So there's diluted earnings per share, and there's basic earnings per share. Diluted earnings per share is keeping in mind all of the potential shares that could add to dilution. So this could mean a bunch of employees that are exercising stock options. This could mean senior notes that get converted to stock, and senior notes are basically debt, and they call this a convertible note. So they could basically convert the amount that they owe for shares instead. So they could get shares of the company, and they could get paid in that manner. So basic earnings per share is essentially just this net income figure divided by the weighted average common shares outstanding. And then we get this net income per share attributed to common stockholders basic. And then there's this net income per share attributed to common stockholders diluted. Now, let me actually just zoom in on this so you guys can see a little bit better. So I want to prove this to you. So I'm going to pull out this calculator right here. And we're going to calculate earnings per share. So right here, they said our net income was this amount. Keep in mind, this is in the thousands. So we need to multiply this by 1,000. So add 3 zeros to that. So we're going to get their net income for 2022 for this quarter, 86,109,000. And then we're going to divide this by the weighted average common shares outstanding basic. So we divide that by 127,149,293 equals 0.677. Now look right here, 0.68. So they just rounded up. So that's how you calculate the basic earnings per share. So the basic earnings per share for this quarter was 0.68. Now we're going to calculate the diluted. Now notice what they do in the denominator. So in the denominator, when they're doing the diluted, they're looking at assumed conversions of options to purchase common stock. Now notice that they say assumed. So we don't really know if these employees are going to exercise or whatever. So we're just assuming that they are. So we also don't know if the senior convertible notes are going to get converted for stock, but we're assuming that they are. So they add all of these things to this basic amount. So you can see that the new weighted average common shares outstanding diluted is a higher amount. And then here on the numerator, we're adding back interest expense and all of this other stuff. And then we come up with a larger amount. So now let's go ahead and calculate this. So we're going to do 87,701,000. I'm taking this number right here, the diluted. We're going to divide it by the new denominator, this common shares outstanding diluted right here, 146,677,879 equals 0.597. We round up 0.6. So that's how you calculate earnings per share. And this is how a lot of companies calculate this. And they show this in the quarterly statements or the yearly statements. So now how do we actually use this? So what we do when we calculate PE ratios is we actually take up 4 quarters of this earnings per share, the most recent 4 quarters, and then we calculate the 12-month earnings per share. So now what we can do is we could go right here. We could go on this Macro Trends website. We could look up Etsy. Now, right here, I'm going to click on earnings per share. And now we can see earnings per share broken down quarterly. Now, this website uses diluted. I want to be very clear about that. This website uses diluted earnings per share. So now we have that earnings that we just got. So it says 0.6. This is exactly what was on the statement, 0.6. So now we take the most recent 4 quarters. So March of 2022, December of 21, September of 21, and whatever month this is, July of 21. We add these 4 up together, and then we get the trailing 12-month earnings per share. So that's $3. So I'm going to prove that to you. 0.6 plus 1.1 plus 0.62 plus 0.68 equals 3.01. Okay, so they basically screwed us out of 1 cent here. Or maybe I did my math wrong. Let's double check. Yeah, I think I did my math wrong. So yeah, their trailing 12 months earnings per share is $3. Now, when we're looking at earnings per share and we're looking on this website, there's something very important you should pay attention to. Look at the trend. So we're going to go all the way back to 2014. So, over in 2014, they were losing money and, they weren't really that profitable. They had one good quarter, and then if you bought on this one good quarter, you would have thought, oh my God, they had this amazing quarter of earnings. Now I'm going to go all in and I'm going to buy everything at Etsy, and, the stock is going to the moon. Well, what happened the next quarter? They barely made anything. They started losing money. They lost more money. They lost more money. And what's happening to the trailing 12 months? Well, now it's going negative. And they started making money again. Okay, that's great. And then they start losing money again. And then finally, now we're seeing a little bit more consistent profit here in 2020. Now keep in mind that this was during the pandemic. So oftentimes, earnings per share for companies can change quite a bit when a massive event happens in the macro. So something like COVID-19 could really affect the company's earnings. And maybe the company really changed something in their core business that made them really, really, really profitable. or maybe they really started buying back shares aggressively, because a company can buy back shares and this could manipulate earnings per share. Keep in mind, the denominator for earnings per share is shares outstanding. So if a company is buying back their shares, earnings per share is going to go up. So this number can be manipulated. So you're going to want to look into this, like why is earnings per share fluctuating this much? So is this because of something that they changed in their core business? Are they repurchasing stock? Are they reducing stock-based compensation? Because keep in mind, they could also dilute us through stock-based compensation. If they're diluting shareholders through stock-based compensation, what's going on is that earnings per share is going down because the denominator is getting bigger. So there's a lot of things that can go on with earnings per share, and this number can be manipulated quite a bit. So it's something you want to look into when you see these fluctuations. Is this the core business changing? Is this an economic factor that now Etsy is all of a sudden doing much better because of the times we're in? Or are they repurchasing shares, or what's going on here? So this is something you really need to pay attention to, and you definitely shouldn't just buy something because all of a sudden they went positive earnings per share. I mean, this might not be sustainable. And we see this with a lot of companies. Maybe one year they have an amazing year and then their earnings per share is skyrocketing and people are saying, well, this is it. This company is going to the moon. And then you got analysts making all these crazy predictions like, oh, 2023, they're going to make $10 of earnings per share. And 2024, they're going to make $13 earnings per share. And 2025, it's just going to be 20 or something stupid. And then that doesn't pan out. Well, then you're going to be in a lot of trouble. So that's why you want to look at consistency in earnings per share. You want this to be consistent. So far we have 2 years of data. Is this consistent enough? I mean, I don't know. I would want to see how do they perform during a recession. Are they going to be okay? Because these were boom years. Think about it. The Fed was a lot more accommodative during these years, and now they're taking away the punch bowl. Are they going to just revert back to these numbers, or can they uphold this? I don't know. I mean, I don't really know too much about Etsy. So this is where you want to start doing more research on the company itself and how they actually got to where they are now. So this is all I want to talk about for earnings per share. And in the next video, I'm going to start talking about price to earnings, or PE ratio. So I hope you guys enjoyed this video, and stay tuned for the next one.